If you're looking for professional day trading education and high-level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional trader for the past 11 years, and I'm here to give you exactly that. Professional day trading education, all here for free on YouTube and on X. And today I'm going to be going over a couple of trades that I took, one on Qs and one on SPY. So let's get right into it. I hope you all had a wonderful Friday. One sec as I load up these charts. Okay. First and foremost, very difficult market. There seemed to be, and I do want to point out this volume here that you see, especially on SPY, as it's squeezing once it broke those highs. Now, I'm not saying that it's one specific short getting squeezed, but essentially that's what it is. It was a large short position, basically tapering out of that position. So that's important to recognize and have the ability to recognize. When you have a major level like this, okay, which is high of range and it's been grinding up, there is also a trend here. And if you just follow my cursor, there's a trend. There's actually two here and they both intersect. The first intersection is about here where my cursor is. And then the next one was at about 600.10-ish, in and around that area. So the plan was, and for those of you that are new to this channel, these blue levels represent the trade plans that I'm given prior to the market open at 9 a.m. So we're all prepared for this. And on this, it ended up dipping down, but it didn't come into a level of support that we were able to take. It did test a level of support, but it wasn't sufficient enough. And there was nothing to risk off of. So as it comes up, we execute the trade. And I should go into SPY's chart here. This chart's going to look really wild. But remember, this is only 2 points from entry. 2 points on a over $600 stock is not that big of a deal. Okay. It's about managing your size. So as it comes up into this area, I simply execute and just let it do what it wants to do. No sufficient pullback, but there was a sufficient pullback. I know members did end up paying themselves here, but it did continue to squeeze. Now, I've talked about this a lot on the channel where I talk about the relationship between distance and retracement. When you have something that goes from low of day, so that dip in the morning is low of day, and it literally goes straight up, that's a big deal. It tells you it's incoming. In fact, let me clean this up. Right up at highs, I said this is about to pull. This is starting to get very toppy. It's the way that it's starting to move up where there's a lot of factors there. I'm not going to get into that because we're going to get sidetracked. But take my word for it, it's getting toppy. And at that point, that's where I start adding. Once it washes, it pops back up. I get one more add there. Okay. So that's where I'm actually applying size and pressure. Now, yes, it looks very wild. It can be very difficult to control your emotions in these situations, but what you have to understand, and I'm going to say this again, the relationship between distance and retracement is a big deal. It's one of those things as a new trader, listen to what I'm saying about that and really soak it in, and I want you to think about it, okay? With what would change the way I would have traded this, and I'll show you. From lows, it comes up, and even small pullbacks on the way up. That would change. I would change that. I wouldn't have held as high as I did. Okay. You can't because that is a very tight, strong trend. What's going on here instead is a legitimate straight squeeze. Remember, these aren't penny stocks. These aren't going to go for a mile. It will top out once that big short gets squeezed. Okay. And then they get out. So you hold your ground and you're patient with your ads and your remaining entries. And that's exactly what I did. So on this here, and you might be wondering, well, where would you stop out then? Well, right here, right up at highs, once it pulls, like I told you, as it comes up, if it would have done this, it changes things. Now this chart has changed. It's pulled back and it's popped back up. If it would have broke those highs, it's time to get out. This thing's going crazy. And then what would have happened is Qs, because Qs and SPY are basically they're linked, right? It would have come to here. So that would be the reset trade. You would simply stop out, chew back the loss. That's fine. It happens. That's part of the game, guys. And then remanage a position up here into that level, which are these highs. Okay. So that's important to know where the stop would have been. But in my experience, remember, I've been doing this a long time, over a decade. I've seen this sort of stuff happen over and over and over again. And it's right at that point there, they'll get you to stop out. Okay. They'll drive it right to that price point where it's like you basically hit the washout belt and you tap out. And that's right where it shifts and it turns and changes direction. And I'll ask you a question. How many times has that happened to you? Probably lots, right? It's about knowing that pain point, right at that pain point, that pressure point. They'll poke and prod you at it. And that's what they're doing. It was actually an amazing day for price action. And I wish I could give you guys an hour long um, trade recap, but nobody would sit through it. And I could give you pure gold on this, a step by step, because what happened on screen share this morning with the price action dissection, I know the members can attest that it was phenomenal. It kept them in the trade, right? And that's important. We have to know when to tap out, and then we also have to know when, okay, we need to expose ourselves to a little more risk and a little more discomfort, but it will pay off in the end, which it did. Now, just as a side note for you guys, I can no longer mention on YouTube my actual P&L. I'm no longer going to be talking about numbers or percentage gains. That's not up to me. That's on them. But what I have done is I have left my positions, my closed positions, my positions manager. You can see. So if you want to zoom in and check out the P&L because you're interested in that sort of thing, by all means, go right ahead. So on this, there were a couple of ads right in strategic areas. And another thing I want to point out, which is really interesting, do you see down here? Now, some of you may not be used to this and don't really know. It's like, oh, that doesn't look like anything different. Because these are options and it's Friday, and although there's 0-day expiry and they expire every day, when you see this, when it's actually that premium, even though it's like basically consolidating right in this area, it's actually lifting up a little bit. That's a good sign. Because normally what would happen is even though it's just consolidating, the price would actually go down. So very interesting in that it ended up being a really nice trade profit wise. And on this here, right into target, which was the level here. Now, again, how do I know it's going to go into that target? Because again, I've been doing this a long time, guys. And when you have these squeezes, it has to test that level, that resistance level or support level. It needs to retest. It has really no choice unless there's a major catalyst that throws off the action. But that's not what we had here today. So locked in a nice morning on that. And now let's go over to the bigger trade, which was on Qs. And this one here was a setup, and this ended up being about $1.60 risk. So again, well within my risk parameters for trading these $500 and $600 stocks. Remember, I'm trading options, and yeah, the meltdown will be a little more severe, but I trade the chart. That's what separates my strategy. I don't trade the options. I trade the chart. And the chart coming back up into highs, I execute, simply work the trade based off of SPY's trend and nail the retest when it comes back up, have an opportunity to correct that average, and then was just super patient with it and paid myself on that big wash and crack down. Because we were watching this range, we knew that big crack. If it was going to break that, it will snap down real hard and fast. And I talked about that a little bit yesterday. So on that note, folks, if you want to learn how to become a trader and work with a coach that not only is good at what he does and has been doing this a long time, but a rare quality that can actually get through to you and actually teach you how to do this, come to tricktrades.com. And if not, all good. No sweat, guys. continue to enjoy my free stuff. That's why it's there. But you do have to like and you do have to subscribe. I think that's a pretty fair trade off. Um, Life is about give and take, and you cannot just take. So have to like, have to subscribe, and which is fine. It'll just take you longer, no matter whose YouTube you're watching. You're piecing together, YouTube videos. It's probably not the best way of doing things. That's why you should go get help. But if not, all good. So I hope you all have a wonderful weekend, folks, and I'll see you Monday. Adios.